Good afternoon, everybody. Today is Friday. It's the 11th of July, 2014. This is Shannon speaking from Alphatrends.net. Let's take a look at the closing numbers for the week, and then we'll look at the charts. It was a rough week for equities as the S&P lost just about a little less than a percentage point. NASDAQ about 0.5%, and the Russell 2000 got hit hard, down close to 4%, and that brought it back to the negative column year to date. So the Russell's been having a lot more trouble and a lot more volatility than the other markets. That's something that we definitely want to be aware of. It's not something to act upon if you're trading the S&P 500 because we all obviously have divergent markets here, but it's good to be aware that there is weakness in this market that has the potential eventually to spill over into some of the other markets. The semiconductors gave back a little bit of their big gains for the year and were lost 1% this week, and the financials down 1.5%. Oil got hit hard too, whereas gold was up. So let's take a look at the charts here. We'll take a look at those bonds, which also had a good week this week. Again, we remain in an uptrend. We've got a pattern here that's very clear. That is higher highs and higher lows. So the longer term trend is still innocent till proven guilty. As I'd mentioned in a midweek video, though, it was time to get a little bit more defensive after Monday's gap down, and then the fact that it rallied up to this prior support level and found resistance at the 5-day moving average and the prior support. So going into next week, we want to look at this market as longer term. We're clearly still in an uptrend. We're extended on a lot of different time frames as well to the upside, and right now we're in pullback mode. We don't know if it's going to be the peak, the high, or whatever you want to call it, but the fact is we have a little bit of reason to be cautious here. Now, the last few times we got below that 5-day moving average, we quickly recovered and made a higher high above a flat to advancing 5-day moving average, and that's what it's going to take to get me more optimistic about the intermediate term once again. So next week I think to focus on about 197 to 197 and a quarter. If we can get back above and hold above that level, then that will be something that's important. I think we also want to keep an eye on this trend line that shows these current higher highs and higher lows that I had pointed out on the daily time frame. So that's this trend line right here, and it kind of goes back to about mid-May rather. And here we can see that with a little bit more clarity if we take a look at it like this, that this is kind of our band of rising support. A trend line, as I think it's Larry McMillan I first heard it from, should be drawn with a crayon, not with basically a pencil and a ruler, because we often see that they wiggle around near that level. But what is clear is this has been an important little band of upward support for this market, and I think that next week, if we see that basically about 194.5 to 195. I think if that level fails to hold next week, then perhaps we see a little bit deeper correction, maybe even down towards that 50-day moving average. But closer or nearer term rather, if we see probably 195.75 given up, then I think that we have to look at this market as still having trouble with a declining 5-day moving average, so it's guilty till proven innocent in the intermediate term. And if it were to break below that, then it's time to be a lot more defensive if you haven't already done so. And that of course applies for intermediate term traders, not for the buy and hold investor. You have to realize what your time frame is, because clearly the weekly time frame, if you're an investor and you've been holding for years, it's very tough to differentiate which one of these pullbacks will be the ultimate top. That's not the area that I choose to focus on. That's not my desired time frame. Instead, I look at the intermediate term to shorter term time frame. And this past week in the NASDAQ, we saw that the market pulled back to its rising 20-day moving average and this prior little top end of what had been a little band of resistance. So for next week, I think 93.30 to 93.50 is our key level for the NASDAQ. We have a similar looking, let me clear the clear those off. We have a similar looking trend line here. Well, let me take a look at, for instance, a 130-minute time frame. We can see it a little bit better there. But this is, this adds to the importance of that 93.30 to 93.50 level. If we're to break below and hold below that, then I think maybe the NASDAQ also sees a deeper pullback, perhaps down towards that 92 level. This is not a call. This is something to be aware of. We have a declining 5-day moving average, but we did clear this 95 level and are holding above it. So it's kind of still just a little bit too early early to tell whether the buyers can take back and hold on to control. If you're long from an intermediate term standpoint, I would suggest a stop maybe 94.50. Even tighter could be about 94.75. By the way, the analysis that I'm doing here on the on these ETFs, I do every single day for Alphatrends subscribers, and the cheapest way to access that is through a bronze subscription. Every day at the end of the day, I go through these indices in this type of detail and talk about various scenarios. That service had been $250 for an annual subscription, and it's currently $149. That's going to go back up to $249 next week, and it won't be repeated. So if you're interested in this analysis, alphatrends.net is the place to go sign up. Get a 7 free day trial to see if it is in fact something you would benefit from each day, and we'll leave it at that. So right now, if we can hold above this 94.75-ish level in the NASDAQ, then perhaps we are still we're still in a primary uptrend, and we're innocent until proven guilty on the weekly time frame and on the daily time frame. So just be aware, though, that breaking back down may the market may succumb to a little bit of pressure. The Russell 2000 again was really our bigger reason for concern this market. Several weeks ago, I was talking about being bullish above 113.50, and then this market has been given us a couple of places where it was pulling back and getting back above that 5-day moving average and providing us with good entries. This past time, though, you can see that this red is the 5-day moving average. What we saw happen is it started to try to form some support there, but failed. It broke down through it. We'll switch to a 30-minute time frame for a little bit more clarity here, and what we see is that we broke below that 5-day moving average. What we would have wanted to have seen was something more like this, and then the 5-day moving average to kind of curl up under it, and then to take out this little level. That, of course, didn't happen. Instead, what we saw with these financials recently was a break to new highs, all-time highs, and that break occurred after a big rally. So we had already rallied from 107 to 120, and then the market broke out, and I warned you don't want to be the breakout buyer after a big percentage move. Now we've pulled back pretty deep here, and this market is trying to establish some support. It's at a key level technically for a few reasons. One, what we see on here is this purple line rather, and this is kind of what helped us get bullish back here, is the year-to-date volume weighted average price. So if you take the volume and the price and average them all together, basically the dollar value that the Russell 2000 traded at, it's right here at 114.21. That's been an important level of support and resistance. Now it's trying to establish support there once again, so that makes this an important level. We can also take a look at Fibonacci levels. I don't want to trade solely on Fibonacci levels, but if I see that, hey, we've got an important Fibonacci level such as a 50% retracement lining up with another technical something that I consider important that I wouldn't trade on by itself either, which is that volume weighted average price year to date, to me that adds a little bit of importance to that. Then when we look at the daily chart, we can see here we've also got that 50-day moving average right in here. So there's 3 technical things that says this is an important level, and what we might have happen is that we do in fact find support here, because you have short sellers saying, hey, it's at the 50-day moving average, let's stop shorting. You have shorts saying, let's stop shorting, it's at the volume weighted average price. They say let's stop shorting, it's at 50% retracement. And then on the other side of the coin, so that's less supply. Then you have, of course, demand. There's certain people that will buy pullbacks to a rising 50-day moving average. So they put their bids in there and it has a little bit more demand. There's other people who put in their demand for the market at the 50% retracement. There's other people who look at this the market having value at its volume weighted average price year to date. So these all help to create a little bit of extra demand, and in this way technical analysis somewhat becomes a self-fulfilling prophecy if we have people taking action at perceived levels of support or importance, let's call it, because we don't know if it's going to hold as support. For right now it's perceived as support, but we're still clearly on the 30-minute time frame and the 10-minute time frame, we've still got a declining 5-day moving average with with a pattern of lower highs and lower lows. So I consider the intermediate term still guilty till proven innocent. It's trying to find support at an important level, a level that, you know, you can go back here and say it was prior resistance as well, but it's trying to establish support at a technically important level, a level that's technically important to various groups of participants, not just the 50-day moving average buyers, not just the volume weighted average people, not just the Fibonacci. So I don't mean to bemoan the subject here, but you have to realize that why does a 50-day moving average have any value? Because people compare the price to that 50-day moving average, and they're trained to not take action or to maybe take action around that area. So right now, going with the Russell 2000 into next week, I think that we want to see it continue to try to establish some support in here. Perhaps we come down and shake out just below this low from last week, and then it can turn around and make a move for maybe 118 once again. But we have to look at this market as you know, showing a lot of volatility, and again, for the year it's now down. So you have to look at this: is this distribution before a much bigger drop after a multi-year gain, or is this just conserving, building new energy for what may end up being a breakout? The answer is we simply don't know, but in the intermediate term, we need to wait for more evidence that the buyers can regain control, and we have to be aware that this is something that may influence the broader market. So far, it doesn't seem to be, but that can change quickly. The semiconductors, again, this market pulled back about 1% this week based on the SMH, but still up 19%, close to 19% year to date, and still a very powerful uptrend. So we found support right at the rising 20-day moving average here, and that is also, as we had identified earlier in the week, the important level to find support was going to be about that 48.5 level. We dipped slightly below 48.5, but going into next week, I think that it's pretty clear. I'm sorry, 49.5. Going into next week, I think that 49.5 is going to be an important level once again. So as long as we can hold above 49.5, then we say, you know, the buyers are in control, but we don't want to be an aggressive buyer here because we have a declining 5-day moving average, and it's, you know, if we can get above and hold above 50-60 for at least a half hour, then I think perhaps we can continue to move higher. But even if it goes up there for a half hour and then falls back down, it doesn't mean you don't have a stop. Risk management is always job number one, and when people say this is going to end badly, it only ends badly for the people who are unprepared. Don't be one of the people who are unprepared. Move to the sidelines when things are indecisive, and that's where we are in these markets. We have indecision. Now, we're talking about the financials. We spoke about the fact that it broke out, and last week we closed out at that new multi-year high, and things were looking good. We can't just buy breakouts, though, without a backup plan, because oftentimes, as we saw here, what we have right now is looking like a failed breakout. So the breakout is important to recognize, but you can't just buy that breakout and not have a stop. I think your worst case stop this week, if you were involved in the financials just recently, would have been about 22.85, and 22.85 is where we lost a little bit of support. And you can see even over here it was really a little bit higher up where it became evident that it's possible this market was going to experience a failed breakout. So for now, we're looking at this market, the financials, as a failed breakout, a broken breakout. So we have a broken breakout, and I kind of like that term. Anyways, we have a failed breakout. We have a rising 50-day moving average. We have a prior area of support. So, you know, looking at this market, I think you have to be very careful. I don't want to buy just because it has a rising 50-day moving average, especially when I look at the shorter term time frame and see a declining 5-day moving average. And I really see a market you know, that's kind of been range bound between 22.40 and 22.95. We spent a little bit of time above that last week, but you know, it's hard to say that you should have a strong opinion in the intermediate term. There are three positions you can have. You can be long because you've got a good uptrend and you've got higher highs and higher lows. You can be short short, market that's declining, lower highs and lower lows, or you can say, you know what, I really don't understand this market. It's time for me to move to the sidelines, or trade smaller share size, move to shorter term time frames, and trade the shorter term time frames and do what's comfortable for you personally. It's not the same thing for everyone. Gold did continue to move higher here, so gold is still, in my opinion, having what's realistically, I think, if they don't scare you out, they'll wear you out, and this may continue for a while. So I'm not really interested in gold anyways because of those daily gaps. I talk about that all the time, but it is behaving better, and I think that if you're long gold recently, then a stop probably near 126 would make sense. The financials, not the financials, but rather the bonds, came into this week looking kind of like we might have a problem in here. We broke this important support level, but again, with a rising 50-day moving average, it didn't say sell short, especially after it had come into that breakdown, already expending some energy. Where has it come from? Where does it have the potential to go? And are you going to be the guy who gets stuck selling down here? Well, what happens is we saw stops get hit. We saw people probably rushing into the short side, but you don't want to sell short after a decline like this. To be the guy who sells short down here because it broke support doesn't make sense. It had just expended a lot of energy, dropping from 114 to 111. It rallied back up much better than I thought it would, and now the bonds are still looking like that longer term uptrend is still intact here. The let's see, shares of Apple, they didn't continue higher obviously this week. We came into this week a little bit cautious on Apple, saying that we wanted to have our stop. I believe it was right around this level here is what I was talking about. Maybe 90. It was 93, then I raised it up to 95-ish. Either way, Apple isn't declining. We've still got a rising 5-day moving average. It's just pausing through time. So this correction that we're currently seeing in Apple, we still have a longer term uptrend. We've got all these moving averages on the weekly time frame heading higher, and obviously we've got a rising 10, 20, and 50-day moving average, and the 5-day moving average is still advancing, but we've got a little bit of near-term resistance at about the 96 level. I think next week, if it gets back above 96, I think there's a very good chance that this stock continues up towards 100. But you have to figure out, well, what's the risk? If you're willing, if you're willing to buy it at 96, do you risk a little bit more than $1? Let's say to 94.75. If it drops down to 94.75, it'll be back below the 5-day moving average and might need more time to heal, or rather just to digest the gains, or it may be in need of a deeper price pullback. Either way, if you buy above here, know where your stop is, and understand that if it has a chance maybe to get to 100 because it's that psychological number, or go up to new all-time highs and pierce 101, then perhaps that's worth the risk reward. It's up to you to decide whether that risk reward does make sense for you or not. Well, a couple other stocks I want to talk about. GoPro. We spoke about GoPro in coming into this week, that I thought it had the chance to come down to the volume weighted average price year to date. The volume weighted average price year to date is about $40.07. It came down to that, and I was also, as I always say, you don't buy. There are levels to be and catalysts to be aware of. There are price levels to be aware of, but it doesn't mean you take action there. Even today, as I'd mentioned to people in chat, we came down, we touched the daily S2, and we were on the volume weighted average price year to date, but there was no evidence that the buyers were taking control when that happened. We were still below a declining volume weighted average price. There was no advantage to being long in there. This week I was cautious, and people were asking me, is GoPro a buy? I said, well, maybe above this level here, but what we have to do is have to see it get back above and hold above the 5-day moving average, and then see that higher high above it. Instead, this week we were stuck below and trapped. You can see there were sellers there. Were they program sellers? Was it manual sellers? Were they evil HFTs? I don't know. I don't care. You don't need to know who. You just need to look at it and say, here's where people are saying we want to sell. Where do they want to buy? We don't know yet. We had a potential level where they would buy at the year-to-date volume weighted average price, but that did not hold. And right now we can look at it and say, well, what's the range that this stock has experienced? The range since it's been public, 28.5-ish up to about $50. We're beyond beyond the 50% retracement. Perhaps we head down towards the 61.8% retracement down here near about 36.60. The fact is, in the intermediate term, we have lower highs and lower lows in GoPro, and so far since the stock has been public, we've seen it a bull market, we've seen a sideways action, and now we're in a stage 4 decline. So you have to avoid it from the long side until we have evidence that it's healing and turning back higher again. I talk about biotechs a lot, about how I don't like biotechs because they're just too damn crazy. And you know, a great example of that, I think, is this SRPT, which got hit once again this week. People have been, you know, bullish and then hating it. You know, we've had these gaps up, and then we've had the gaps down, and big moves lower, gap down, gap up, big gap up, and another gap down. I don't know how people stay invested in a stock with volatility like this, but be aware of the biotech stocks if you're not familiar with how they trade, because they have this massive volatility. And I realize that I'm telling a lot of people something that they already know, but others don't. So anyways, be careful with these biotech stocks. And finally, you know, here's one idea that may be okay for next week. Shares of WebMed. It's in a clear uptrend on the weekly time frame. It broke some resistance here at 50 recently. That resistance is holding a support. You can see that we had expanding volume as it rose, diminishing volume as it pulled back, and that prior resistance holding support at a rising 10-day moving average. So these are all the little pieces of the puzzle. Prior resistance acting as support, a rising 10-day moving average acting as support. It is advancing on heavy volume relative to the decline, the profit taking and consolidation, which has shown diminished volume, so people aren't rushing to get out of this. The longer term trend is higher. A trend is, once established, is more likely to continue than reverse, and we're seeing a digestion of those gains. What we have, though, on the 10-minute time frame, you can see we have a little bit of resistance here this week at about 52. So I think it's going to have to clear 52 to get going, and maybe a risk of a little more than $1. So if it clears 52, worst case stop would be a risk of about $1. The 5-day moving average is starting to flatten out and will turn higher if the stock gets back above 52. So that is an anticipatory trend alignment trade. You want to anticipate all potential scenarios, know what it takes to get it bullish, know what it takes to change your mind if it breaks back down, but anticipate those scenarios, but wait for price action before you actually participate. The same would go true for GoPro. We're anticipating the potential of a turning point down here at the volume weighted average price year to date, which is at about $40 a share. We're anticipating that the daily S2 might act as support. So it says drill down to the shorter term time frame. Is there actual evidence that the buyers are gaining control? If there's actual evidence that the buyers are gaining control, then we would have seen something like this. It would have maybe gone below that volume weighted average price, created some resistance, then got back above it. But the evidence simply isn't there. And when you have a market that's as indecisive as it is right now, and we're just in the thick of earnings season, you have to be extra disciplined and careful about what you trade, how you trade, and that's what I do at Alphatrends each day. The right stocks at the right time for the right reasons.